What's up, guys? How y'all doing? All right. Welcome to the backtesting session, guys. So I'm gonna wait a little bit for some people to join in. It's 5 p.m. How did you guys do today? Win, loss, break even? How was it? In my opinion, today was wasn't easy, to be honest. There was fewer opportunities, and the opportunities were on a higher time frame. I'll talk about it. I'll talk about the opportunities of today, but also I'm going to talk about the opportunities of the week. Yo, yo, yo. What's up, Slays? All right, guys. So, you guys already know the first segment of the stream will be the best setups of the previous week. So, from Monday, let me go here. So, from Monday, September 29th, all the way to Friday, October 3rd. Okay, I'm going to go over all the best trade you could have caught on that week. Then I'm gonna do a backtesting tournament with you guys, and also we'll give out two 50K growth accounts. So this is the planning. Um, you guys already know when I'm talking about the best setups you could have caught last week. It's with my model, so my strategy, and I'm gonna explain the strategy, explain all the best setups you could have caught, and answer every single question you have. So all right, guys. So we're gonna start. Um, there was multiple trades you could have caught last week, and in my opinion, last week was one of the best weeks because um, there were opportunities with structure and a lot of narrative behind them. So I'm gonna speak a little bit more about it. Okay, so right now, let me just go over the strategy first. Okay, the strategy, as you guys know, I'm gonna do the bearish scenario. Okay, the strategy is usually you want to see, let's say, price running down here, and let's say you have this as your liquidity pool. So you have a liquidity pool being here, which is your sell side liquidity. Let me just put it in black right here. Perfect. So you have your sell side liquidity sitting below. So then what do we know? We know that price either goes from a state of accumulation, then distributes, accumulates, distributes, accumulates, distributes, accumulates. Okay, so what do we know? We know that we don't want to trade those areas of accumulation. Okay, this is where you're gonna get chopped up. This is where you're gonna have a hard time finding a trade. And also, these are high risk to reward trades, but these are not necessarily the time where you would want to engage in a trade and predict the market. Usually what you want to see is price displacing, and when it's displacing, it will let fair value gaps. Okay, it will let either bullish fair value gaps below price or bearish fair value gaps above price. And when those gaps are being created, we know these gaps act like a magnet, so we want to target them as soon as we reaccumulate, and then we can find signs of aggression from those buyers. Okay, so let me just show you guys an example. So right here, you guys see we have a sell side liquidity pool. I would not try to long. Let's say if price runs down towards this low extremely passively, sweeps it, and then shifts. I don't want to see this. I want to see price running extremely aggressively towards a low, forming a 15-minute gap. Okay, this is usually what I want to see. And as soon as we are forming this gap, I know that if we sweep this low, we reject it, and we have an unfilled gap above us, it means that there wasn't a fair transaction between buyers and sellers. So we need fuel for the market to go up or down. So we want to target this internal unfilled 15-minute gap, basically because it's the fuel of the market. Okay, so this is the play. Okay, in terms of the candlestick pattern, how does it look like? it looks like this. All right, so we have a fair value gap, which is a 3 candle pattern where the, let's say here it's a bearish fair value gap, the down wick of the first candle doesn't touch the up wick of the third. Okay, so which is right here. This would be best case scenario. Okay, best case scenario is this one, and right here this is the fair value gap. And as soon as you have this fair value gap, okay, you know you are in a potential scenario where you need fuel in the market. You're rejecting lows, you have an unfilled fair value gap above you. You want to find signs of weakness at those lows, signs of aggression from those buyers to trade back towards this gap. And of course, it may sound easy at first, but let me just show you guys multiple scenarios so you understand the framework behind it. Okay, so right here, let me just see. All right, okay, is there any questions, guys, regarding the setup? If yes, make sure to type them in the chat. I'll respond to everything. But we have multiple scenarios to go over, and we're going to start on Monday, September 29th. All right, Monday, September 29th. So we are looking for unfilled fair value gaps. Okay, this is what we're looking for. So there is 2 ways to play it. It's either you wait for a liquidity pool to get swept and then you try to catch the reversal, or you play it from the candlesticks. Okay, so let's say right here, what am I seeing from this candle? We're sweeping the previous candle's high, can't close above the previous candle's high, so we cannot accept price above 24,955, and we have what? A bullish fair value gap right below price. Okay, what does that mean? It means that right now we're seeing responsive sellers step in above, and buyers are most likely getting squeezed right now. Knowing this, I want to find signs of aggression as soon as this new candle opens up to trade back towards this unfilled gap on the 15-minute chart. Okay, this is usually what I'm going to be looking for. Okay, so let's say here in this scenario, my draw on liquidity would become this unfilled 15-minute gap. And the reason why I play this scenario a lot is because of the timing. Okay, the timing tells me that as soon as a gap gets created, we usually tend to come back to it aggressively if we find the right structure. So here, let me go down to a 1-minute chart and try to find the right structure to possibly enter short back down towards this internal low. Okay, was it on the 10? Right now we're on the 10th. I'm getting like deja vu. I'm getting deja vu from this, actually, because I think I already saw this scenario. Not that I saw this scenario, but I thought like I already did it in the past Tradeify TV call, basically. But all right, so you guys see we are barely able to close above the previous candle's high. What am I going to do? I'm going to try to find signs of weakness right here to trade back towards this gap. So here I'm going to go down to this 1-minute chart. All right, now I have what kind of structure? I have a high, low, higher high. So for me to consider going short, I would want to see us close below this low here, which would create a breaker block. Okay, and as soon as I'm closing below this low, I know I have enough sellers that is stepping in, and those buyers are being squeezed. So this would be my confirmation to go short back towards this internal gap. Okay, so here, let me wait. We open higher on the new candle. We're going to wait for us to close right below this candle's low. As soon as we close below this candle's low, right here, this is where I would anticipate shorts. Okay, right here. So I will put a sell limit order, stop loss right above this candle's high, take profit for a 1.4 to 1 risk to reward back towards the most recent unfilled bullish fair value gap right below us. Okay, so this is the trade. First trade you could have caught. What happened? 15-minute chart wise, we're forming a 15-minute bullish fair value gap. This candle right here, the candle that is creating the bullish fair value gap, is failing to accept price above the previous candle's high. We're letting a bullish fair value gap right below us. We know this is basically a confirmation that there was not a fair transaction between buyers and sellers right here. So now price is inefficient. And for it to have For it to be healthy, we need to see a retracement back down towards this gap, okay, to have enough fuel for the market to move. So here in this case, really good short scalp back down towards this unfilled gap. So let me just show you guys more trades you could have caught exactly like this. Exactly here, okay? You see we have a gap right below us, okay? Bullish fair value gap right below us. And as you guys can see, if I go on this 1 hour chart, we're tapping into a 1 hour bearish gap, which is an extra confirmation that is telling us that price is inside a bearish PD raise, okay? So then seeing this, I'm gonna go down to this 15-minute chart. I see that we're creating a 15-minute bullish fair value gap right below price, and you are sweeping buy side. We're failing to accept price above the previous candle's high. We're closing back inside the range. We have an unfilled gap below me. So I'm telling to myself, all right, now, okay, we need some fuel to go up or down. Why? In this transaction right here with buyers and sellers, price ran up so aggressively without giving any pullbacks. So I know that right here inside this fair value gap, which is what we call this 15-minute pattern right here, there wasn't a fair transaction between buyers and sellers. Buyers were too strong, so sellers couldn't transact here, which lets this low volume area, this basically inefficiency. So now for the market to be healthy, we need to retrace back down right now towards this gap. So here, as soon as this candle closes and a brand new candle will open right here, I will look for signs of weakness right here to trade back towards this gap. So let me go down to this 1 minute chart and try to find a reason on why I should enter the chart. Enter the shorts. Okay, so here there is always I have a lot of questions regarding this, let's say all the time on Twitter or in my Discord. And if you have the right type of market structure shift, or you have the right type of 1 minute structure, 2 minute structure towards this unfilled gap before the candle even closes, you can enter. Of course, it's riskier, but usually if we're creating bearish signs, okay, of course you could get manipulated, but if we're creating bearish signs and there is an unfilled gap right below us, it is a really good confirmation to go short from, because if you're waiting too much, you are most likely not going to get picked up, especially on NQ. This is a pair that you need to take your decision pretty fast. So here in this case, 15-minute chart, failing to accept above the previous candle's high, unfilled gap right below us, 1 hour gap, bearish fair value gap that got tapped. We swept this buy side liquidity. So now I'm going to go down to this 2 minute chart. What am I seeing? 2 minute inversion fair value gap, 2 minute change in a state of delivery. This is the exact area where I judge that the sellers stepped in and are strong enough to see some downside back towards this unfilled gap. Okay, really good potential short right here. Stop loss right above this candle's high, 1.3 to 1 risk to reward. I'm going to go short right here. Limit order right there. Let's wait for us to get picked up. Next candle opens up, pick us up, stop loss, take profit. Let's see what it does. And you guys see in 4 minutes we hit our target, which is exactly what we want to see. When we're scalping, I always tell you guys that the levels that you're marking out should either stop you out quick or hit your target quick, because in scalping, you want to have areas that have substance, that have actual meaning behind, the technicals. You do not want, let's say, to engage in a 10-point scalp and for the market to, chop for 30 minutes all the time when you're entering. It means that you're most likely not looking at the right thing. Okay, so here, what did I like about this trade? We had an unfilled gap, so an inefficiency below us. I knew that if we can't close above this previous candle's high and we're failing to accept price above here 61.25, and we have an unfilled gap right below us, it means that price will most likely run down to fill this gap, to have enough fuel to go up or down. Okay, I know it, because the framework is not regarding necessarily candles, it's regarding the unfilled fair value gaps. Okay, this is really what's important there. So this was the second trade you could have caught this week. So then let me just go on the next day. Oh no, I think there was another setup on the same day actually. Okay, so this is, in my opinion, what I call an A plus setup. Okay, why is it an A plus setup? It's because there's structure, and I already talked about it in the beginning a little bit, but here is the exact scenario I was referring to. You have a sell side liquidity being the 1 p.m. low here. Okay, you're sweeping it, you're failing to accept price below the previous candle's low. You have an unfilled gap right above you. Okay, one thing I will say, guys, is that this is a scalping strategy. It's not something that you necessarily need a daily bias. You need a weekly bias, and don't let people fool you and tell you that you need all those higher time frame candles to take a potential scalp on the lower time frame. If you're holding your trade for 5 to 10 minutes, you need a higher time frame, let's say like the 15-minute or the 30-minute, to tell you okay, price is most likely willing to go here right now, and you don't necessarily need to have the right bias on the higher time frame, because the price goes up, down, up, down. You could make money by shorting here back towards an inefficiency. You could make money right here, longing an inefficiency. There is so many opportunities in a day to make money in both sides. So you being extremely biased because of a higher time frame candle doesn't really make sense if you're a scalper, in my opinion. Okay, so the priority for me is the 15-minute 1 hour chart, and right here the 15-minute is telling me that the chances are that we're going to come back to fill this 15-minute gap. What actually happened here inside this case, we swept a sell side liquidity pool, which is right here. We're failing to accept price below the previous candle's low, which is 24,805.25. Good. We have an unfilled gap above us, which acts as a magnet. What does that mean? It means that sellers were so aggressive right here that there was not a fair transaction between buyers and sellers. Sellers were too aggressive, which lets an area with low volume. And price hates those areas of low volume. It usually goes to fill them. And if I know this area has low volume and this candle is failing to accept price below the previous candle's low, the chances are, if the new candle opens up right here and we're finding signs of aggression from those buyers, it is a really good scalp back up towards this inefficiency, because the market needs to be healthy and come back to this area. Okay, just go on your chart and do the work. Look at how many times we're creating gaps on any time frames and we immediately pull back to them. And as soon as you're going to see this, it will open your eyes. So here, in this case, let me go down to this 1 minute chart. This candle will close, a brand new candle will open. And right now, this is a scenario where you already have the right structure to long back towards the unfilled gap. You know, this high right here is your drawn liquidity, and you guys will understand. Every time I post a trade on Twitter, I'm always targeting the most recent high, or I'm always targeting, a structural point which is not that far away from us. Okay, and this is the basis of my scalping. Right here, what am I seeing? I'm seeing that we have a low, high, lower low, and if we are truly bearish, for me, you see this small block of orders right here. Okay, I'm gonna come back. Okay, just gonna do this. Structure wise, what is happening? Okay, you have what we call a bearish block, bearish order block. You have a high, so a low, high, lower low. So this small block of orders right here, for me, if we're truly bearish, we should hold this to create new lows. But if we're bullish though, we will disrespect it and we will use this zone as our support level to create a new high back towards the most recent high, especially if there is an unfilled gap right above us. Okay, so here in this case, let's take a look at what price did. We inversed this bearish fair value gap. We created that bullish breaker. So two signs that were creating bullish PRAs and also creating that order block, that bullish order block on the 1 minute chart. So now we're sweeping sell side. I'm bullish. We're disrespecting this bearish fair value gap, bearish order block, turning it into a bullish breaker, bullish inversion. And we have also an unfilled gap right above me, which is a magnet, an area with low volume, and an area that if the market truly wants to be healthy, we need to retrace back towards it immediately. So I have a lot of stacked confirmation that are telling me that price is willing to create a new high. So right here, let me just wait for this candle to close. Okay, it's 29. This candle will close right now. So I could immediately go long from here basically predicting that this breaker block will hold to create a new high for a 1-to-1 risk to reward. You don't need a 1-to-5, 1-to-3, 1-to-4. Don't let those guys fool you. 1-to-1 with scalping and having a really good framework overall is, in my opinion, the thing that will make you profitable and will make you understand true market structure. Okay, if you're trying to reach for extremely high targets, you will not understand why price actually reversed there or actually went there in the first place. You're just too focused on making money. But if you're focused on getting those consistent base hits, you will understand way more of the market, in my opinion. So here is your stop loss, here is your take profit right here. Confirm. As you guys can see, in few minutes we hit the target. And what I like about this trade, again, look, we hailed my level and it didn't take too much time to hit my target. Okay, I like to be right quick, I like to be wrong quick. So yeah, your stop loss would be basically based on this IFVG. So you do not want to see price getting down and starting to have heavy candle closures below this breaker, below this order block. You want this zone right here that I marked out to be the zone where you are reacting to create a new high. If price goes down aggressively, do not start dragging your stop loss. It is just a trade, not worth taking anymore. You know, price decided to squeeze you, and it will happen at least 30 to 35% of the time, 40% of the time sometimes, and you just got to walk away with that loss and do the same thing on the next day. All right. So here you guys are able to see, as soon as we're creating gaps, we usually tend to go back towards them and fill them immediately. Okay, it will happen in some cases that price will not go and fill them, let's say just like in this case right here, and it's your job to find the reason why price didn't go back towards this area. Okay, was the structure right here? Let's say, did we create a breaker? Did we create an SMT with ES? There's a lot of reasons on why you could potentially lose a trade, but it doesn't mean that if it's a loss, you did something wrong. Okay, that's really something, a concept that not a lot of people get, especially in scalping. You have so many opportunities, so many potential setups. It's not that you lose, that you necessarily did something wrong. Okay, get that out of your mind. Okay, so these were 3 plays you could have caught on Monday. Let me just go on the next day here, and also just for you guys to understand a little bit more, this is also how I get my bias from the higher time frame. Okay, let's see here, higher time frame wise, even if it was not on a 15-minute chart, when this candle closed, I had this internal fair value gap as being my drawn liquidity. I knew that price would be attracted back towards 917.25. Let's say the new candle opens up, goes up first. I still think overall that the market is bearish until we fill this gap. This is how I view the market. Okay, so here, let's say we push down, we fill the gap, all good. Now we're creating a bearish gap. Okay, so here is basically the time to look for potential signs of aggression from those buyers to trade back towards this gap. Okay, so here would be my drawn liquidity. We're creating gaps. Let me see if we can find basically signs of aggression from those buyers. Right here, we're seeing some aggression from those buyers on the hourly. We're most likely going to fill this gap, in my opinion. What is happening on the hourly? We fill this gap perfectly, and then we start going down. So again, this is basically a good way to view the chart, even on the hourly, the 4-hour, multiple time frames. Okay, not just the 15. But if you're looking at a let's say a 1-hour chart, I wouldn't go below the 5-minute to find an entry, or even the 3. Let's say the 3 is good in my opinion, but the 5, it would be better. Okay, so let's go on Tuesday and let's talk about the best setups of that day right here. You guys see it's pretty simple. We have the same exact setup that is forming right inside of that day, which is Tuesday, September 30th. So we have the London lows right here. If I take a look at this indicator, it shows us the London range. We're sweeping the London low and we're closing back inside the range. Okay, we're closing back inside the range of the previous candle of the sell side, and we have what above us? A 15-minute unfilled gap. What does that mean? It means that if price failed to accept below the previous candle's low, failed to go down and close heavily inside this 945 candle on the 15-minute chart, it means that the chances are we're going to come back towards this level, which is an unfilled 15-minute gap. What is an unfilled 15-minute gap? It is an area where sellers were so aggressive in the first place that there was not a fair transaction between buyers and sellers. And if we have this, it means that for the market to be healthy, we need to retrace ASAP towards this unfilled gap to have enough fuel for the market to go up or down. Okay, so now just looking at those candlesticks, the structure, so liquidity, unfilled gaps, I can see that this becomes my new target, the target that price will most likely reach right now. So here, going down to this 1 minute chart, where was my entry? Exactly here. Okay, so you guys see we're sweeping this internal low, and we have what? Again, this bearish order block. Okay, we have a low, high, lower low. This small block right here, even if it's a 1 minute candle, if we're truly bearish, we should hold this level in order to create new lows. This would be my resistance. But if we're bullish though, and I have an unfilled gap right above me, and I can't see any candle closures below the previous candle's low on the 15-minute chart, this level becomes attractive to long from if we can close above it. So here, I'm telling myself, all right, we have an unfilled gap right above me. If we're disrespecting this bearish order block and we turn it into a bullish breaker, this will be my area, okay, that I will enter from back towards the unfilled gap above me. Okay, so right here, really, really good confirmation to go long from at 58 right here. Long, stop loss right below this candle's low, take profit at a 1-to-1 risk to reward. Okay, just like this. So you guys see in few minutes we hit the target. Of course, this play right here was kind of a breakout play, not necessarily waiting for price to retrace back down towards the breaker. And this is what makes trading difficult in a sense, or even not necessarily difficult, but makes it challenging in a lot of cases. It's because the framework will always remain the same. It will always have a lot of value, but the entry is usually what you will need to adapt between different market conditions. There's market conditions where you will need to enter market usually on as soon as you're creating the breaker, as soon as you're creating an inversion for value gap. And there's market conditions where you will need to wait for the retracement because price likes to come back towards 50% of the previous range every time. Okay, so it was kind of tricky right here. Not gonna lie, I had my limit order right here and I did not get filled. But looking back at it, of course, it's really easy to say the entry was here. But let me tell you one thing. I think looking back at it, I definitely did a mistake because I was being a dick for a tick. What does that mean? It means that, let's say here, it is one of those scenarios where you just need to enter market, because if you don't enter market, you're missing out on a lot of money just because you want to be filled one handle below, and it's not worth it. So here, let's say this breaker was only 4 handles away from this candle closure. And with the account size that I'm trading, it's not necessarily worth it to wait for price to pull back towards this breaker just for $100. Okay, so in this case, it was a scenario where entering market, not waiting for price to come back, and being a dick for a tick was gonna basically make you win the trade, when someone who was being a dick for a tick and was waiting for the best possible confirmation was gonna be left out of that trade. Okay, so really good trade right here. You guys are seeing it in lifetime. or sweeping sell side, sweeping the previous candle's low, closing back here. We have an unfilled gap right above us. We go and fill it immediately. Okay, really good trade. Again, right here, same thing that is happening. And I'm gonna give you the read that I have with the market when I'm seeing those kind of candles, and you guys will be able to let's say reach another level just by looking at those candlesticks. Okay, so you're gonna tell me, Amos, some people are telling me I want to take those trades, but I usually tend to either miss them or enter too early. And I will give you a tip right here. So if I look at this chart right now at 10:45, okay, I'm on a 15-minute chart right now. Do I have a potential long or short opportunity? No, there's no unfilled fair value gaps. There's no liquidity that got swept. It was right here, but we already filled this gap at 10:15. So now I'm going to wait for a displacement candle from each side. If we displace down and we create a bearish 15-minute gap, I will look for longs back towards this unfilled if we can't close below the previous candle's low. Okay, same thing here. If we displace aggressively to the upside and then this candle closes, I know that this is the moment where I need to look for a potential scalp. Okay, right here. Let's take a look at this 15. This 15-minute candle pushes up aggressively, but this is the second candle. A fair value gap is created by a 3 consecutive candle pattern. So here is the first, second, and if the third candle right here, which is going to open up right here, doesn't trade back towards 809 level, it will create a gap. And if it fails to accept price above 55, it will let an unfilled gap below me. So I have levels that I know, okay, if price, basically what I'm marking out is this high. I know that right now this candle is extremely aggressive. If we open, we go higher, we sweep this high, and then we create bearish structure without ever filling this level, which is 809, which is basically the level that will solidify the fact that we're going to have a gap below us. I know I have a trade. Okay, so this is basically what I'm looking at, and this is how you can prematurely enter inside those trades. So here, let me show you guys what will happen. I mark out this level because if price is failing to accept above this level, we will have potentially a scalp back down towards this unfilled gap. Okay, so here, let me just show y'all what happened. New candle opens, it's a 15-minute cycle, so we're waiting. Here, it's 11:07, and we're creating what? An IFVG. Okay, so in inversion for value gap, what is this inversion for value gap telling us? So we're creating a high, low, higher high, and this higher high created a fair value gap on the 1-minute chart. And what do I see? I'm telling myself, all right, if we're truly bullish, we should respect this fair value gap in order to create new highs in the market. But if we're bearish though, and we're failing to accept price above 54, which is the previous candle's high, we're most likely going to go down, form that 15-minute bearish fair value gap, bullish fair value gap, and then we're going to have a short play back down. Okay, sorry, I was reading the chat at the same time and my mind got fucked up. Yeah, I'm going to do giveaways, guys, trust. But yeah, so let me rewind a little bit. We're forming high, low, higher high, and we're forming this 1-minute fair value gap. I know, okay, that if we're closing below 54, we're going to fail to accept price above the previous candle's high, and we're going to have an unfilled gap right below us. So then if I can disrespect this gap, this is my entry, because it tells me that sellers were aggressive, buyers are being squeezed, and if price starts going down, this is my confirmation that I was early in a move that basically got me rewarded for knowing my levels and knowing that a gap was going to get created on the 15-minute chart. Look at this, we're going short right here. Stop loss right above this candle's high, take profit right below. Right now, since the gap is still not being created yet, look at what's going to happen. Okay, so here we're on the 1-minute chart, it's 11:07. There's still 8 minutes left for this candle to close. So now let's wait. 11:08, we push, we hold the previous candle's high. We start to go down. 11:11, we're still not taking out our profits. Why? The gap, okay, price could keep going down, and this candle right here, the third candle, is the one that is going to create the gap. Okay, So as long as this candle is not closed, I'm not taking out my profits. So here, price goes up again, feels this. And at this candle right here, 1114, if I go on this 15-minute chart, you guys will be able to see it. This is the moment where we create this 15-minute gap. We were able to predict that price was in a open, high, flip, creation of the upwake of a future bearish candle, go down, close, and then there's an unfilled gap right below me. Boom. This is where you take out your profits. And it could sound advanced, but if you understand that you only need to start locating yourself in those kind of scenarios when you have a displacement candle on the second, this is going to make you take trades that are not going to chop you up so much. Okay. No beef in the chat, guys. No beef. All right. So right here, I would just put my take profit right there, confirm, and look at what's going to happen. New candle opens up and takes out my profits. Okay. If I go on this 15-minute chart, look at what happened. We filled the gap. So this was my whole framework. Okay. You predicted the second candle itself only rather than trading a third one. Crazy, sir. I don't necessarily understand what you said, but it's the third candle that I was being able to predict. So you want to predict the third candle when the second was so aggressive that you know you're going to have a potential unfilled gap. Okay. If I have this scenario, okay, this second candle is extremely big. This is the moment I know that there was not a fair transaction between buyers and sellers. This right here is a nice impulse. So knowing that there's an impulse, I can mark out the high of this candle. And if the new candle opens up, we're failing to accept above, and there's a gap below me, most likely what's going to happen is that as soon as this candle will close, we're going to go down to fill the gap. Okay, so it's all a timing thing and an understanding of fair value gaps and when to predict and when to wait for a little bit more confirmations. Okay, it's not necessarily easy because all the scenarios are different, but you could definitely find yourself with those kind of actions. Okay, so let's say right here we're forming a bearish fair value gap. If we're finding signs of aggression from those buyers right here, we can trade back towards this unfilled gap. Look at what's going to happen. We fill this gap, but it doesn't mean it will do it all the time. You need to find the right structure right here. As soon as this candle closes, you need to find the right structure in order to trade back towards the gap. Here, let's say in this case, you see, we formed the gap, but if there was not the right structure inside this price action right here, you do not want to trade back towards the unfilled. Okay. So this was it for Tuesday. So there was 2 trades you could have gone on Tuesday, and both were exactly the same. You see, so let me just go on Wednesday, and hopefully you guys are enjoying this. It's a completely different style than what most traders are doing, and this is what I like. Also, I hate doing what most people are doing. I always like to have my own style and my own approach to the market. Okay, so here, this is a trade that I actually took, and you guys can see it on Twitter. But right here, it was exactly the same case. Okay, so we have right here, if I go on this daily chart, we have the previous daily high. You guys are seeing the high of this candle. We had the previous daily high. If I go on this 15-minute chart, we have what below me? A 15-minute unfilled bullish fair value gap. What does that mean? It means that if price is rejecting a level of buy side, we have an unfilled 15-minute gap below us. Price is most likely in a state where it needs fuel in order to go up. Okay, it's exhausted. Those buyers are being squeezed by those sellers, and the responsive sellers are liking where price is at right now. It's at a premium. The price is in a good area for them to short. So it becomes attractive, especially when there is a gap. So here, what am I seeing? I'm seeing that there's a level that has potential resistance, and I'm seeing that there was not a fair transaction between buyers and sellers. Buyers ran so aggressively that we let that inefficiency, that area with low volume. So for me, we need to retrace back down towards this level to have enough fuel to push price back to the upside. Okay, so right here, what did I do? I went down to this 1 minute chart, and here is a case where you have multiple swing lows close to that unfilled fair value gap. So it is a moment where every time you sweep a swing low, especially on the 1 minute chart, you could have a bounce, especially if you're at all-time highs, all-time high scenarios. Okay, so right here, I'm going to show you exactly what I did. I went to this 1 minute chart and I found the right structure. So what happened? I found that we created a high, low, higher high. Okay, let me just show y'all. So you see the structure? It's a high, low, higher high. So for me, I'm telling myself, all right, this is a bullish order block. This is the area where if we're truly bullish, we should hold in order to create a new high. But if we're bearish though, and I know I have an unfilled gap that is setting up in a few minutes, I want to see this order block, this bullish order block being disrespected, so I could use this block of orders as being my resistance level to short from back down towards this level. Okay, I have a target, I have an area with low volume, I want to target it, and this is the exact scenario that I want to short from. So here in this case, I will wait for price to close below this level and take an entry when it retraces. Okay, so here it holds. Then right here, this is the moment where we create our breaker block, we create our order block, we create our fair value gap right here on this 1 minute chart. So this is the right moment to look for potential short because you have an unfilled gap right below you. Okay, and in this scenario, I'm going to show you guys exactly how I played it. So I waited for a new candle to open up, and it opened up aggressively, filling me inside this order block, because since you have a breaker, an order block, and a fair value gap, it will be attracted to get that pullback. Especially here, this candle on the 15 did not close yet, so you had some room to wait. So here, short, stop loss right above this candle's high, take profit at the 15. I'm going to show you guys what I did though. What I did was that I knew this level was a level where we could potentially bounce from since it's a swing low on the 1 minute chart. So here, it's either a level where I get out of my position or I put my stop loss at break even, because I know that if price reached that level and was 1-2 handles away from hitting my target and it's retracing back up, it's not a good sign. I want to be right quick, I want to be wrong quick, and I'm willing to cut out this trade faster because I'm not seeing the right amount of selling pressure when I initially entered. Okay, so that's basically what I'm looking at right here. Let me just show you guys exactly what happened. We opened higher, filled this 1 minute gap. As soon as we swept, you see here, we're going to sweep this low in 1 second right here. As soon as we swept this low, we went literally, I think 0.25 handles away. 0.25 handles away from hitting the 15-minute gap. I am not going to take a loss on that kind of scenario. I'm sorry. Of course, this would be my target. Of course, my take profit would be here, but I'm not the kind of trader who will let this trade come back to me and stop me out. I'm not, I really do not care about taking out profits right here if price retraces, and I want to take my piece of the pie. I do not want to, engage in a trade and be in a trade with my hard stop if price went 0.25 handles away from my target. Impossible. So exactly here, I decided to take out my profits and get out because price didn't hit the 15-minute gap. It was 0.25 handles away, but I got my piece of the pie, and I know this swing low is potentially an area where price could bounce from in order to create new highs in all-time high scenario. Okay, so here was a scenario where I got out before the 15-minute fair value gap got filled, and look, it was the right decision because price flipped and went back to the upside. Okay, but the framework was right. The thinking behind why I took the trade was right. There was a gap below me. Going 0.25 handles away from the gap for me is still a win. Okay, so then let me just show you guys if there was any other opportunities. Not any really good opportunities right there. Price was always closing strongly above the previous candle's high, so did not really like what I saw. So then let's go on Let's go on this right here. Okay, first trade of the day. Can you guys tell me what's the buy? Just looking at this chart, okay? I want everyone to just type in the chat, where do you think price is going to go with the explanation that I gave? Like, it's simple, no? Like right here, just looking at this chart. Overall, of course, yeah, you might lean bearish, you might do this and that. Right now, at the moment that I look at this chart right here, where is price most likely going to draw to? Okay, just simply looking at liquidity, unfilled gaps. We're sweeping what? Sell side into what? An order block, a higher time frame order block, a higher time frame fair value gap, and we have what above us? A 15-minute, extremely ginormous unfilled gap above us. What does that mean? It means that right now, you guys are understanding it pretty well. Right now, this is the most important thing in scalping. It's the timing. Even if you know that price is going to go down on the day, if you do not know where to put your stop loss and you cannot time the market, you are never going to make money. And this is why I try to find quick scalps in and out of the market, because I want to be right more than I'm wrong. And I know this is more consistent, a more consistent approach to the market. On this 15-minute chart, you guys had it right. It is way more bullish than bearish right now on this candle. Why? We are sweeping sell side, we're bullish. We're tapping into a higher time frame bullish fair value gap. So H1 fair value gap, H1 order block, we're bullish. This candle is failing to accept price below the previous candle's low. What is my previous candle's low? That is going to solidify the fact that we're going to create a gap if I can't close below it. 36.75. Look at what's going to happen with that candle. We're sweeping it. We're not seeing aggression from those sellers below 36.25. What does that mean? There is going to be an unfilled gap right above us. So you guys already knew that by the time this candle was printing, when this candle was printing, the new candle opened on this 15, I saw that this candle was so big that we could potentially have an unfilled scenario. This is the prediction mind that I have always. This candle is closing. What do? I only mark out the previous candle's low. I'm like, all right, if price is failing to accept below 0.36.25, I'm going to look for longs and I'm going to look for signs of aggression from those buyers, because we're going to be in an unfilled 15-minute gap scenario. This candle is too big. I go down to this 1-minute chart and let me just show you guys in real time what happened. New candle is going to open in 1 minute. It's 9:45. New candle opened. We're creating a bearish gap. Good. We're still waiting. Okay. Waiting, because we want to be close towards that 15-minute candle closure. Okay. Right here, it's 9:57. We have what as a structure? We're still, right now we're closing below the previous candle's low. We're accepting price below the previous candle's low. Right now is not a good time to take a potential long opportunity. Okay. Now let's wait. 58. Look at what that 58 candle. This right here is my line that is telling me, all right, if you're closing above, you're going to be bullish. So this is what I call PCL, which is the previous candle's low. And right here, if we're closing above this previous candle's low, okay, it means that buyers are strong and we're most likely going to have an unfilled 15-minute fair value gap scenario. So here, what do I tell myself? Do I have the right structure to go long from? Yes, we have this bearish fair value gap that if we were truly bullish, we should have held in order to create new lows. Right here, we didn't. We're disrespecting it. We're also creating that small order block, a little bit premature, but order block right here. So what am I going to do here? I'm going to put a long position, stop loss right below this candle's low, targeting the unfilled gap. The unfilled gap right now would be this candle's high. If I go on this 15, it would be this high. And what is this high? This 946 high. Okay, so here I will put a limit order inside this inversion. Let's wait for us to get filled or filled. Stop loss, take profit. Okay, we're going to put exactly a 1-to-1 risk to reward just so you guys can see the reaction. Okay, new candle. So this candle just closed. Okay, 15. There's an unfilled gap right above me, right here. Look at what price is going to do. Push up, hold. It took 1, 2, 3, 4, 5 minutes to hit my target. Was that zone a zone that I was confident in longing because I saw in real time signs of aggression from those buyers and signs of those sellers being squeezed? Of course. So this is the reason why I won in 5 minutes inside this trade. Okay, so here, hopefully you guys are understanding and are starting to understand the framework behind those trades. We are creating displacement. We're in a state of accumulation here, distribution. And as soon as I see this distribution, I know that we're going to have a potential unfilled gap scenario. So as soon as this candle is closing, I'm marking out the low. So I'm like, all right, right now the new candle is chopping, accumulation. If it goes down, and I have no trades, which is the area right here. A lot of people are trying to long for no reason. Wait for aggression. As soon as you have this, then long, you will see the pop, boom, back towards the unfilled. See how clean that was? These are the type of trades that are screaming for you to take them. Okay, these are not trades that are forced at all. And let me show you guys yet another exact scenario that literally the same thing happened on the same day. Okay, what do we have here? The AM low. What do we have above us? An unfilled 15-minute gap. This second candle right here, let me just show you guys. When I saw the second candle, what did I do? I marked out this low, okay, which is the area where I want to see price close above. Simple as that. I want to see price close above this to long. Okay, and this area right here, please don't trade here in the next 15 minutes. Shit. Hopefully you guys have a good roadmap with that. Okay, please don't trade here in the next 15 minutes. Why? Can someone tell me why I do not want us to trade back towards this area here? If you understand this, you're pretty smart and you understand those concepts to a deeper level. Of course, you can understand the fact that you do not want to see heavy candle closures below the previous candle's low. But if you understand the reason why we do not want to see price come back towards the first candle's up wick, you will understand like everything about it. Can someone tell me? I want to find the reason. I want to find the reason on why I do not want to see price trade to 25.054 in the next 15 minutes. Exactly, Maharshi, okay? There is not going to be any imbalances created if you're trading back towards 25.054, okay? You're not going to be in an unfilled fair value gap scenario, so you're not going to be in a good trade. So you have levels to respect. You do not want to see price trade right here, and you do not want to see price close below this level, which is the previous candle's low, which is 25.019. So you have a good roadmap, and of course it could close below it on the 1 minute chart. But the most important thing is not to see any candle closures on the 15, the time frame you're looking at. So here, let me show you guys. Okay, let me show you guys in real time what happened on the 1 minute chart, so you guys will be able to understand how to take those trades before they even happen. Okay, please do not trade here. Please close above. Okay, and this is my sell side. Damn. Sorry guys, I'm extremely sick, so like my voice is a little bit weird. So we're sweeping the low. Okay, I'm waiting for a 15 minute, okay, 15-minute cycle. So I want to see price close above here on the 15-minute chart. What do I have now? Low, high, lower, low. Same exact scenario. This is what? A bearish order block. If we're truly bearish, we should hold this zone in order to create new lows. If we're bullish though, we will disrespect it and we will close most likely above the level that I want, which is 018. And if I see this, I will go long back towards the unfilled gap. Okay, and we're gonna have an unfilled gap if we do not trade above 54. Okay, really important. So here, you see this zone? This is the zone where I'm like, all right, we disrespected the bearish order block. the bearish order block, turn it into a bullish breaker. Look at what's going to happen. We're pushing up, almost traded inside this area. Okay, I said please don't trade here in the next 15. It's 11. There's 4 minutes left for this candle to close, and I still didn't trade here. So it means that I have a super small unfilled gap yet. Okay, still. Okay, but it's enough. So then we see price coming back towards the area. I know that right now this is my moment to go long from. Okay, here, or you could wait even for the next candle to close. Look at this 15-minute candle. You have exactly all the rules respected. You have the unfilled gap above you. You didn't close below the previous candle's low. You respected that sell side liquidity. You are delivering from a higher time frame bullish PD array. Everything is screaming that price is going to most likely create a new high back towards this unfilled gap. This is the moment where you want to long back inside this breaker. 1-to-1 risk to reward, as simple as that. 1-to-1 risk to reward, not 1-to-3, not 1-to-4. Let me just put my limit order right here. We're filled, stop loss, take profit. Look at what's going to happen. Look at how we're going to respect this box right here, which is my breaker block. This is how you're using breaker blocks. This is how you know that your breaker will hold. It's when you have an unfilled gap right above you. Okay, right here is the area where you take out your profits. Why? Because this is the moment where you filled that unfilled gap. Okay, I put the take profit a few handles above, but usually this is where you want to take out your profits. So exactly right here you got filled. Let me just rewind it. Shit. You got filled, stop loss, take profit. Sorry, I just put the take profit too high for some reason. 460. So here's the stop loss, 1-to-1. Don't want to risk more than that. And then look, fills the target in multiple minutes, but see the level that you marked out. Never got disrespected, got respected. Wicks do the damage, body tells the story. Wicks do the damage, body tells the story. This is the best possible quote I've ever seen in trading. Wicks do the damage. They do the damage here. Okay, people are going short here, but body tells the story. The body closed back. The body is telling you that the buyers are winning inside this candle. Why are you shorting? Why are you trying to chase price just because you understand the concept of a breakout? Understanding breakouts, understanding, liquidity sweeps is not enough. Like, those are just random concepts. What you need is a system. A system. What is a system? It's an entry that is repeatable in the long run, where you're going to put your stop loss exactly right here and your take profit exactly right here, and in a span of 1 year, or in a let's say in a span of 200, 400 trades, you are going to be profitable. This is what a system is. Okay, a system is not just trying to make random concepts work with discretion, which is what 99.9% of people are doing. Okay, so here, really, really good trade you could have caught on Thursday, October 2nd. Again, hopefully you guys are enjoying, because this is not something a lot of people are doing, which is showing the frameworks. Okay, showing the frameworks is usually was the most valuable thing. Okay, and I could show it to y'all in any time frame. Look right here. Price is creating a gap here. Bearish gap. Price is failing to accept price above 35. What is going to happen? Fill the gap. Good. Let's wait for another scenario just like this. Okay, we're closing above the previous candle's high though here, but look at this candle right here at 10 p.m. We have an unfilled gap right below us. There, it's telling us the signs of aggression from those sellers. What is most likely going to happen next? Filling this gap. Good. Let's wait. Right here, we're on the 1 hour chart, and I can know usually where price is going to go. This is how I find it. We're forming a gap. Okay, yes, we're closing above the previous candle's high, but I still know we have an inefficiency below us. So if the new candle opens up, sweeps the high, flips back below the opening price, and I have signs of aggression from those sellers, most likely the gap is going to get filled. It's an unfilled gap. Okay, we need fuel. Look at what happened. Boom, we filled the gap. Look at what's going to happen next. We're creating a bearish gap here. Bearish gap. And I was on stream on Thursday, and I said to y'all, we have an unfilled gap. If we are failing to accept price below this level right here, 14, and we're seeing aggression from those buyers, the gap is my next draw. It's my next stop. What is happening here? 11 a.m. candle shoots up, shows us a lot of aggression. What is my next stop? This high, this fair value gap. On the 1 hour, we're on the 1 hour chart. Okay, we're not on, a 15 like I just showed y'all. And I could do that on any time frames. Could do that on the 5, the 15, the 30, anything. Okay. So here, let me just show you guys the last trade you could have caught on the day, on the week. To be honest, on that day, there was absolutely nothing. That's why. But let me show y'all today. Okay. Today, and you guys will be able to understand a little bit more about how I did find my bias in the morning, and how basically it was a hard day if you were scalping, because the ranges were bigger. And yeah, so basically, so let me just show you guys. The first play you had this morning was this. Okay, the long. Why? You are sweeping sell side into bullish Peter raise. This candle is failing to accept price below the previous candle's low. We're closing back inside the range. We have an unfilled gap right above us. What do I know? The chances are we're going to go back towards this inefficiency before we go back towards this low. This is the thing that I know. Okay, 15, 1 minute. Okay, so then I go down to this 1 minute chart. Do we have the right structure? Right here, the structure looks quite mid. Okay, we did form that lower time frame order block. Okay, you could definitely try to enter here, tighter stop like this, tight stop, 1-to-1 risk to reward. In my opinion, it was, a trade that was a little bit forced because the entry was not the best. And those kind of trades are, you're going to feel the need to enter inside of them. But trust me, it's better to just wait. Okay. Higher time frame wise, when I went to in the beginning of the day, I told the people in my Discord I was bearish. Why was I bearish? I'm lagging. Am I lagging? Am I good? Do you guys hear me, guys? Tell me if you guys are hearing me or no. It's perfect? All right. I got baited. All right, guys. So the time frames you want to find your bias from, usually, like, let's say higher time frame. Okay, we're not trying to find a trade there, but let's just put you in a situation where, okay, you don't like to scalp, you don't like to have this kind of pressure on you to just go in and out super fast. I want something on the 4 hour, the 1 hour chart to find my bias. Good. Let me go on this 4 hour chart and show you guys why I was bearish in the beginning of the day. Here, you see this 4 hour candle? We're sweeping buy side liquidity. We're sweeping all-time highs. What do we have below us? We have a 4 hour unfilled gap. Unfortunately, you see here we closed above the previous candle's high. So here is a scenario where you wouldn't want to short right here at the close if you have the right structure. Why? It could fake out because this zone could act as your support in order to create new highs. Okay, but if you did close below, okay, this would have been a moment where you could short immediately at the open of the new candle. So here, let's say I put yourself in this situation. I knew that the chances were that we were gonna fill this 4 hour gap before we were gonna see this high. So knowing this, I have in mind that every single up move is most likely going to be the creation of an upwick of a future bearish candle. Okay, it's extremely detailed and it goes far. But if I have this fair value gap, internal bearish fair value gap, bullish fair value gap, sorry, as being my draw because we're rejecting buy side and we have an inefficiency below us, and I know that this is the fuel of the market. I'm telling myself that right now, if we go up, and I know that this is my draw and it's accurate, that this is manipulation. This should be just the creation of the upwick of a future bearish candle. Okay? Upwick of a future bearish candle. It goes far, but this is the power of 3 concept. So I know right here, this is the close of that candle on the 4 hour. Let me just show you guys what happened. I know this right here. I'm going to mark it out. Amos price wants to go here. Good. Amos price wants to go here. Perfect. So now I'm going to go on a 5-minute chart because I'm looking at a 4-hour framework. I know that price is willing to go down. I'm going to go on this 5-minute chart. So now I know that price wants to go down here to fill this unfilled gap, but I need to be cautious of this structure because price did close above the previous candle's high. So we could find potential support in those areas, okay? At the previous candle's high, basically. So here, let's wait. We're waiting. What do we have above us? A 15-minute gap. Perfect. This is most likely going to be the area on the higher time frame that is going to be respected for us to drive us back down here. Okay, but I'm going to wait for 5-minute confirmations. So here we're pushing up first. So you're seeing in real time that we're moving to the upside when the real draw is this magnet, this unfilled gap right below us. So I'm judging, okay, I'm biased. I'm judging that every single push up is most likely going to be a manipulation to create the down wick, the up wick of a future bearish candle. Okay, sorry, I'm tweaking. So here we're sweeping this high inside this 15-minute bearish fair value gap. And then I know this low is most likely going to get taken out because there's an unfilled 4-hour. What am I going to wait for? I'm going to wait for a break of those lows here, those areas. So here, let me just show you guys what happened. We broke right below the opening price, which is what we call a change in a state of delivery. This is the moment where I know, of course, the best play would be to wait for price to close below this low, which would create the full breaker block basically. But the premature entry would be the change in a state, which is closing below the opening price of the series of up close candles that created the sweep. Okay, so here, series of up close candles that created the sweep are these ones. And if you're closing below the opening price and you have an unfilled gap below you, you're going to see multiple scenarios like those where, it will show you the same candlestick pattern on the 5 or on the 1-minute chart, but it will just not hit the same. It will not have the same, the same delivery. And this is because you don't have the right roadmap. You don't have, you don't have the right framework overall on why this pattern should work right now. The timing is so important. I'll always say this: price is on the y-axis and time is on the x. But if both of them are not aligning, you're not going to make money. Okay, time, price. Okay, time and price. So what is the timing aspect with, let's say, this model? It's the fact that as soon as a 4-hour, let's say, as soon as a gap gets created, this is the moment where you would want to look for confirmation to scalp that gap. So here, what is the trade? Wait for price to pull back towards this area. Stop loss right here. 1-to-1 risk reward. You don't need to be, to have the sniper entry of the century. Okay, you need to know your signs of aggression from those buyers, from those sellers. You want to know your framework by heart, and you want to know when to take this trade. And as soon as you have this, you have all of those things lined up, then it's good enough for you to take a trade. So here, new candle fills you. Smaller pullback here, and then in a few minutes you hit your target, which is this low. Okay, do you understand why that 5-minute structure held? It's not because of that high, low, higher high, lower low, breaker block, pullback. Of course it is because of it, but the overall reason why price wanted here was because of that 4-hour candle. It was because of that framework, that overall read of the market. The higher time frame is what drives the market. The lower time frame could be faking you out a lot of times if you don't have the right framework. Okay, so this was basically what I was telling myself in the beginning of the day, and this is usually how I find my bias in the beginning of the day. Okay, but let me just show you guys what happened after. So I'm gonna show you okay, right here. Okay, you see here, price is creating what? A 1-hour bullish fair value gap. Okay, but we're sweeping buy side, failing to close above the buy side. We are closing above the previous candle's high, which makes me you know, a little bit skeptic about shorting as soon as this candle closes. Even if we have the right structure, I want to wait for extra confirmations. But now, what do I know? Just by looking at this chart, I know this. Amos, price wants to see this level soon, real soon, because we just created it. So now your job is to look for signs of weakness at those highs in order to trade back towards the gap. Okay, timing, your pattern right here. I'm leaning a little bit more bearish, and I would look for bearish market structure shifts back towards this area. Why? Because we have an unfilled gap below us. Look at what's gonna happen on the 1 hour. So let me just go on the 5. This candle is closing. Brand new candle opens up. We break down. We created that order block. Let's wait. Let me just show you guys what happened. This is the area I want to target. Okay, Amos price wants to see here soon. Look at what happened. We went down. We created that bearish order block, held it, went down towards this gap. You see, it may sound, you know, hard, confusing at the beginning, but if you put your head down and trust the fact that, okay, this is my framework, this is my timing, this is my model. If I lose, I lose. If I win, I win. But I'm going to understand every single bit of information regarding those concepts. You know, you could master anything. You could start using VWAP with this, could start using anything, but having the right roadmap is what's going to put you in the game in the first place. Okay, a lot of people think genuinely that their problem is psychology, when in reality they don't have the skill. Do not think that if you understand those concepts, let's say if you understand break of structure or all the ICT concepts, that you're going to be a good trader. Concepts are just concepts. Understanding how to play with those concepts and how to make a profitable system with those concepts is a whole different game, okay, which is profitability. So just go on your chart and try to find those areas where you create a gap and see how fast we come back to those gaps. See how when we create those gaps, why do we come back to it right now? Let's say in this scenario, you have an unfilled gap right above you. Why are you coming back towards this unfilled gap right now when in another scenario you didn't? Okay, and this happens on every pair, on any time frame. I could go on the 5, the 15, the 30, the 45, and it will happen. Okay, so I didn't even do any backtesting tournament, guys, and it's already the time for me to say goodbye. And it was an absolutely fun session. I really enjoyed it, and you know, I saw all the comments in the chat. Hopefully you guys are enjoying those sessions, man. It's if I had that, you know, I would have, even if it's only been 3.5 years that I've been trading, if I had the chance of having someone who's explaining his strategy and showing it in lifetime every single week, every single day, I would have really enjoyed it. Really, what's hard with trading in the beginning especially is the fact that we have a lot of overwhelming information, and you don't know where to start. But if you have, let's say, someone who's guiding you towards that, that's the best. So appreciate you guys for showing up and showing love also in the chat. If you guys have any questions, make sure to type them in the chat right now. I will do the giveaway, and I will also respond to all your questions. All right, but hopefully you guys enjoyed. You guys can hear I'm sick. You know, I'm not at the best of my ability right now, but pushing. But you see here again on that 1 hour, how do you know the Asian Open is gonna open to the upside or to the downside? I know there's a gap right above me, and price would be attracted to this gap. So at this exact moment, this is the moment where I'm like, okay, buyers, there's either two ways. Price is either going to shoot up right now, or it's going to sweep it, find buyers, go up. Two scenarios. Find the reason why sometimes we go down to sweep this low again to then drive back up, and master it, you know? But you see, Asian opened hourly. Well explained. So I appreciate all the comments, guys. Much love. Yeah, I'm gonna take honey, bro. To trust my mother's gonna take care of me. Still still want that care, bro. How's my cold? It's getting better, but my lips are dry. It's tough. Hopefully I'll be good for Tradeify TV live session. But yeah, I'm gonna do the giveaway right now, guys. Um, man, how can I do the giveaway? All right, we're gonna do. I'm gonna. We're gonna do how is it called? A number. Okay, we're 75. We're gonna do a number from 0 to 100. I have two numbers in mind right now. Do not spam it. If I see you spamming it, you're done. So spam. Don't spam. Don't spam. Just a number from 0 to 100. Go for it. I have two numbers in mind, and let's go. Okay, I'm gonna keep up with the chat. Oh my god, you guys were close from the first one. Do not spam it, alright? I'm gonna go back to the logs. Oh my god, some people are so close. Lock in. No. So someone put two numbers. Hell no. Okay, you can put another number if you didn't. If you already put one. Oh shit. Oh my god, close. 72. Good job. Emad, you got it. 72. So the first number was 72. Now I'm going to switch it. Okay. So now we're doing from 200 to, yeah, 200 to 300. Come on. Let's go. 200 to 300. One number. The first winner of the giveaway is Emad El Uari. And then from 200 to 300. This one's going to be simple. Just 299. Jip Smith. Good job. 299. You got it. Good job. So Jip Smith FX and Emad El Ouari. Make sure you guys have your email in your YouTube description. Guys, like the stream. I didn't even tell y'all to like the stream. Like the stream right now, please, guys. Make sure to like and subscribe to the channel. When I do those giveaways, it's usually I ask for 100 likes. Damn, I fucked up. But please like the stream right now to just show me some love and show me that you enjoyed the stream. And yeah, like and subscribe for the giveaway. So it was 250k growth account giveaways. Appreciate you guys so much again. Make sure to like the stream to show that you enjoyed it, and to show the team that you guys still want me to do those kind of recaps and those kind of backtesting sessions with y'all. All right. So let's see here, Asian session wise. I'm leaning bearish, extremely bearish. With this 4-hour candle close, we're gonna see also this is a daily bullish candle closure, so we're gonna see, but leaning a little bit more bearish. But guys, make sure to like the stream. Hopefully you guys enjoyed. Can you guys bring me up all the way to 100? That would be insane. But yeah, appreciate you guys so much again for showing love and being there on the stream. You guys already know I'm gonna be there on stream on Tradeify TV at 9:15 a.m. EST on Wednesday. Appreciate you guys so much, and I see you guys on Wednesday. Peace out. Much love, guys.